I'm Nicholas Penrake, and you're listening to A Trader's Life, the podcast where I get to talk to successful traders about their approach to trading, how they started out and went from broke or breaking even to pulling in thousands of dollars a week. Trading is a tough game. They say only around 5% of those who try actually make a profit. Join me for A Trader's Life to glean some valuable insights from the market wizards I get to talk to. Today I have Richard Krugel on the show. And how's it going, Richard?
It's going really well, Nick. Thanks very much. Actually moved back to my office. I've been cooped up at home during this lockdown. It's been 4 months now, so it's about time to get out again.
Yeah.
So productivity will hopefully pick up a little bit again. It's thanks for having me. Great to be on your show.
Yeah, you're based in South Africa, Cape Town, is that right?
That's right, yes.
Yeah, good. And it's, of course, winter there, isn't it, at the moment?
It is. It's going into spring around about September, I think, but it's still pretty cold, rainy. It's quite miserable here in Cape Town, but it's just the way it goes, I suppose. It's a beautiful city, though, so that compensates for the terrible weather now and then. Yeah.
Anyway, let's dive straight in. How did you get into trading?
Okay.
And are you from a financial background or not at all?
Not from a financial background whatsoever. Actually, my brother, and this is, I would say, probably more than 16 years ago, was very interested in trading, and he was going to start with a brokerage firm as a junior. And unfortunately, he passed away in a car accident after. It was a bit of a terrible time of my life back then. I was in completely different sort of line of work. I was working on private yachts overseas in Mallorca and Spain. And so I came back to South Africa, went back to Spain, obviously picking up all the pieces, and found out that he was actually going to start this job. So it wasn't long after I went back to Spain, I decided I want to move back to South Africa. I've done many things in between, mostly self-employed. I won't go into that in too much detail, but I kind of got interested in what he was interested in, and like most traders, just really opened the browser, start Googling trading, etc., and I got caught up in a little bit of the BS that's online.
Sure.
With trading, how easy it's supposed to be, how much money you can make in a short period of time and all that sort of stuff. So I started dabbling in trading, I would say about 14 years ago already.
And was it apparent fairly early on that it's not that easy, and it's,
yes,
really you do have to
for sure
study quite hard before you make
I remember pretty
gains.
well that I opened a Forex account. Most traders start with Forex. And just basically try to go at it. Obviously, that $50 I opened my account with went very fast. Lost that consecutive deposits just as fast. But I would say, which also happens to a lot of traders, is that the bug bit me. So, it took me a very long time, a lot of hard work to finally make this work, where I suppose a lot of other traders would have just given up, to be honest.
Yeah. And so how would you define the bug? As you says, it bit you. What was the challenge there? Why did you, blow 2 or 3 accounts and still want to go back in there?
Well,
what drove you?
I'm a kind of guy that's pretty hard-headed. I want to make something work. I always keep at it. I've actually met people along the way that were making money. Maybe some of it was BS again, if it was from an online sort of place marketing, either the educational programs or a signaling service or whatever that might be. But I knew earlier on that it is possible to make money with trading. It's just that I had to figure out how to do it, which is another story on its own, to be honest.
And what do you think were your typical mistakes early on? Was it risk management sort of covers a lot of things, but maybe it was lot size, just not being able to predict the sudden sharp moves that you can get with Forex. Was it that kind of thing? Were you taking the wrong currency pairs? Well, can you remember at all that far back?
I think just not having a decent strategy, number one. Not sticking with an actual strategy, jumping from the one thing to the next best supposed thing. Either it was an EA like your black box systems, algorithms, or some trading strategy or educational course that you would do. Not sticking with something long enough and just jumping from one thing to another, I think was a big mistake. Obviously, there's so much fake or crappy strategies out there. Sorry for saying that, but
fair enough.
In the end, I also do believe it does depend on your time constraints. Do you want to be like a scalper? Do you want to be a long-term swing trader, or whatever your approach might be, investor that's going to buy in old stocks, whatever that case might be? You really need to sit down and figure out, do I want to be stuck in front of the screens all day long? That's one of the things. And secondly, obviously, do I have a proper strategy that's been backtested properly, that I gain enough confidence in to actually pull the trigger when the time has come to trade? And obviously, like you said, the risk aspect of things in the beginning, I've made all the common mistakes that beginner traders make by just moving or widening their stops, or entering into a trade, not placing a stop, not knowing when my targets would be, basically failing to actually plan a trade properly, and then just getting into it. And then obviously there's a lot of emotional aspects involved in trading as well, like losing a trade and then seeing it's gone into your direction, your intended direction, which also happens quite a lot with traders, and then having that sort of revenge trading attitude of trying to, I'm gonna show the market sort of thing, and
I'll
try to get back in and get slaughtered.
Yeah.
So all the common mistakes, believe me, I've made them.
How long was it before you went from mostly losses or breaking even to even profits?
Well, it wasn't up until about 2011. I think it was about June 2011 that, and this is while I was still holding a full-time job, self-employed yet again, where I've got a good friend that's been trading much longer than me, and he mentioned that there were these guys in Cape Town that was running a trading floor. So they were accepting junior traders, and I applied for it. The requirement wasn't that much, that you had to have the most experience, but went through a pretty hectic interview process. I had to write some legal exams with the Financial Services Board, which is our regulating body in South Africa, which I eventually passed. And then I had some great mentors there that helped me basically get into trading in a very fast-paced environment, I must say. It was like being thrown into the deep end. I was executing anywhere between, 60 to 100 trades a day, where some of the more seasoned guys who were there a little bit longer were doing up to 200 trades a day.
Wow.
Basically, trading the equity markets like the stocks that's on the South African JSE, Johannesburg Stock Exchange, and although it was very fast-paced, I sort of made money, but I also had to pay a lot of desk fees, which is like a fee that you have to pay to be there. And also there was quite a large commission split that you had to pay when you made any profits. So I was sort of going one step forward, two steps back, sort of breaking even. And I stayed with him for about a year. And eventually, I was consistently starting to make a little bit of money, and then the bug really bit. But I decided I can do this on my own, much better. Don't have to pay all these fees. Took most of my money and invested in proper computer, multiple monitors, proper software indicators, and start delving into the futures market. I moved away from the South African equities. But as you can imagine, like it's a very stressful, how can I say, a method of trading, trying to execute 200 trades a day, for example.
Oh gosh, yeah.
it was really weighing heavily on my mind, very stressful. Didn't have much time with my family, that sort of thing. So I kind of moved into the direction where I want to be trading on my own terms, my own method, so forth. And I took it from there. So it was around about 2011, I would say 2012, that I really started. I sat myself down and knew that if I want to do this permanently, that I better either find more mentors to help me out with this. And I've already spent a lot of money and time and effort in this, that I really need to make this work. So, yeah.
Yeah, you're sort of already in there, aren't you? Yeah, committed. Yeah. Did you ever think maybe trading's not for you and sort of feel you'd hit a rock bottom and thought, Jesus, why do I do this to myself? Or did you?
More times than I can recall, to be honest with you. Trading is one of those things that it's way different than a normal job where you get paid to perform. Where with trading, you've got to accept that the market's always right. You got to be you. Don't take a knock on the chin. Well, we do take a knock on the chin, stand up and accept the fact that you were wrong, and just keep on going. Obviously, you do need a good strategy and all that to make things work, which is a massive part of trading. But there's so many times that I wanted to throw in the towel, but I just stuck with it.
Yeah. What do you think helped turn it around for you? I mean, was it just refining your strategy? Was it certain tools? And I remember I came across your early videos because you were talking about the pitchfork, which I didn't even know existed in the toolkit, as you kind of alluded to in the video, that a lot of traders don't even know it's there. And I found that very interesting, and it helped me analyze price action. Talk to us a little bit about that.
For sure. I mean, after the trading floor stint that I did, I was fortunate enough to actively, well, I wouldn't say fortunate enough, I actively pursued help from potential mentors. And then in 2012, I came across a guy that helped me out a lot on the option side of things. And immediately I've started seeing more consistency in my trading. Even that was a whole process of learning. It's quite a get to learn options is a quite steep learning curve. But the consistency started getting way better, and also not having to day trade all the time was a great plus for me. And taking some of the methods that I've learned there, and just getting that sort of confidence that it is possible to consistently make money in the markets was a great leap forward. And then I also approached another guy that's from the States. And he was yet again another friend of mine. And during his early days, before he actually launched his own website, he was teaching a lot about market geometry, which is one of the tool sets that the pitchfork is part of in market geometry. And I've got deeply into market geometry. I still am. I really love it. It's a great way to figure out the underlying symmetry that's prevalent in markets, and then using that as an edge, understanding how market structure work, understanding how corrections work, why reversals tend to happen, working with multiple time frames. It's quite a lot of a broad subject, but I've managed to, in the end, take bits and pieces from all the mentors I've met through the years, and basically take bits and pieces, like I said, and mold that into something that fit my personality, my time constraints, and the way I want to trade. Which is also a thing you'll find with traders that's been trading long enough, is that they tend to take bits and pieces from all these people they've learned from, their mentors, and making it their own, taking ownership of it. And obviously, building confidence is still one of the biggest things to get to. And once you got that confidence in the strategy, then it's so much easier to trade.
Yeah. What's a typical day look like for you? Are you an early riser? Do you start early, or?
Well, with the lockdown, not so much anymore, because you wake up in the morning and you just don't feel like approaching the day and so forth. But I would wake up. I'm a heavy planner in my trading. I believe that if you do not plan a trade properly, obviously according to your own strategy, then you should not be trading at all. So I would typically go make a cup of coffee, a bit of a breakfast, and then open the computer up, look at my charts, and then start looking for trading ideas. And sometimes looking for a trading idea can take anywhere from an hour to 2 hours. And when I do find one, that's not enough. I'll analyze that markets from anywhere from monthly timeframes up into 4 hourly timeframes and see where the market is. Formalize a bias of what I think I want to be doing, and in most cases, a trade wouldn't just be there immediately. I would want a market to be doing something. Obviously, what the market does, what I want it does, it doesn't always work out. But I plan
sure.
a plan properly ahead, and I write these things out, which I think is a great lesson that a lot of traders should take away. Is rather than just having everything in your head, go write a sort of a report for yourself.
Okay.
So you understand exactly what it is I want to do. I assume the market might be doing this, and if it does do this, and it follows your assumption, then once it then gets into, let's say, area you want to trade from, and it does a certain few things according to my strategy, then yes, I will trade. So I'm perfectly, how can I say, prepared for when a trade does pitch up. If it doesn't follow my analysis, then I'll either have a plan B or I'll just scrap it and move on to another trade. So, it could take me anywhere from 3 to 4 hours and sometimes maybe even 6 hours a day to look for trades, look for other trades that I identified before that might not have set up yet, or if I'm already in trades, how I'm going to be managing once they open, if they're profitable, that is. So always keeping in mind what your risk might be and all that sort of stuff. So it is a process, a lot of planning, and I think if there's any takeaway through the session, what we're having today, for any newbie traders out there, is that you need to start planning your trades properly, and it's a great benefit to actually go write down that, even if it's on a piece of paper, on a Word document, whatever it might be, and go write out what your plan is according to your strategy, so that you're well prepared when a trade does set up according to your plan, and then just trade it.
Yeah. Have you found trading during these pandemic months more tricky or slightly easier? Does it change anything? They seem to be more volatile these times.
Yes, there's definitely a lot of volatility. Since the beginning of lockdown, I've managed to pull off some really good trades. And I must be honest that over the past month or so, that most of the trades I got involved with or analyzed started ranging sideways, with spikes up and down, seemingly going nowhere. Just a lot of confusion around, and the volatility, like you mentioned, definitely picking up. But that being said, this kind of forces me to either make my stop losses larger, just to give the market a bit more space to breathe without taking on more risk, obviously. It's definitely been tricky, but there are still, I think, a lot of opportunities out there if you know what to look for.
So I guess if you're making your stop loss wider, you're reducing your lot size to compensate for any kind of
correct
retracement. Yeah,
it depends what I'm trading. I trade multiple markets like forex, commodities, and then the options side of things as well. Futures now and then, although I prefer to trade options on futures rather than the underlying contract.
Yeah. Do you think being a great trader is an innate skill, or even a very good trader?
I think.
Is it something you sort of almost in your DNA somehow? There's a sort of a natural.
I don't know. I mean, I've got no financial background whatsoever.
Yeah.
My opinion on this would be that it is not an easy skill to learn, but if you really stick with it, like I did, unfortunately for me, it took years, and luckily I kept with it. If you really want it enough, and you've got the willingness, the perseverance, and you've got the willingness to learn, and to start changing your perception of or your emotional aspect of things, accepting that you can be wrong quite often, and just knowing how to properly manage your risk, etc. If you really stick with it long enough, and very importantly, educate yourself, and also very importantly, have a right strategy, and also very importantly, find a good mentor that's actually doing this, and learn from these people, then I think you stand a better chance than most people, for sure.
As a rule, are you ruthless with your losing trades and patient with your winners?
Yes.
Because it's one thing I do hear from top traders, that they've managed to quickly ditch a losing trade without emotion, whereas most of us, certainly at the outset, we're like, oh God, that's money, that's money, it's money.
It depends what you trade as well, Nick. I mean, if you trade options, for example, most strategies that we employ or I employ will be, you got a set limit of risk on there. And if you've got enough time before expiry, you can still change things around to hopefully work in your favor if the market wins against you or you're starting to take a loss. But when it comes to trading the underlying, before I enter, I know where my stop loss will be. I know it will only be a small percentage of my account, and I do accept that risk before I enter into a trade. But like you said, or like I should say, is that so many traders mostly focus on how to enter a trade, but they do not take into consideration how important it is to manage an open trade. How to basically give the market enough room to move in without getting stopped out too often, and just being able to milk the market for as much as it wants to give you. That's a whole skill on its own.
Yeah. Is there anything you can single out as the most important element in deciding to put on a trade?
Once I've planned, I need to see a certain few trading conditions that need to pop up. They are basically hard set rules that I have. But because I've planned ahead of time, I do not really have that fear of missing out or any fear when I do put on a trade, knowing that I'm obviously going to take on some risk here, but I also know that it's just a small part of my account. But once you do pull the trigger and you're in that trade, then, I think that is, for me, less than 50% of trading. For me, the most important part is then, like I've mentioned, how to manage that open trade without getting stopped out. Like you say, be quite. You must be quite aggressive with not taking on or not having something going against you, but trying to let your trades run, which is easier said than done. So
yeah, of course, yeah. You see some profit and you see it climbing up quite high and you think, surely it's going to turn.
And this is where it comes to beginner traders as well. If they were taking multiple losses and all of a sudden they see some money on the table, they just want to get out. And soon afterwards they see, oh my dear, it's like the next 2 days, 3 days, they went three or three times higher
or whatever.
This just comes to bad planning pretty much. And it's a skill that you have to learn.
Yeah, and that's where the pitchfork and channels are so useful. Yeah, because you can start to see the movement of price action, can't you? Do you trade stock and commodity markets as well?
Stocks I'll get involved with now and then if I see an opportunity. On the stock side of things, I would prefer to trade options on them. But for me, the commodity markets is still one of my favorite markets, especially to trade options on them, for example.
Can you think of any good examples of market tone tipping you off on a trade? A sort of sense of what the market is doing because you're looking at charts. And I suppose there will be a tone there. I mean, obviously, you get the extremes of cascading candles and rising, but is there ever that sort of sense of there's a shift here, there's a subtle shift? And
yes, for sure. And this is why I do employ larger time frames. Sometimes I like analyzing from a monthly time frame, depending on how much data you obviously have. It's like, for example, a crazy chart like Bitcoin, for example, has not been trading that long. But if you start looking at a currency pair like US dollar, Japanese yen, or the euro US dollar, or commodity markets that's been trading for decades, you'll be quite amazed to see how, when you do apply market geometry correctly, that those market geometry lines will continuously work into the future for many years to come. So you only do that work sort of once, and it's quite important to then get sort of a tone, as you've mentioned, that when price actually reaches these sort of lines and areas, that you can expect a change or a shift within the markets. And then drilling down to a lower time frame, trying to get into an entry where your risk would be obviously at its less than your, because you have to be careful that you know where all these lines are on a bigger time frame. So many times in the past, before I got more proficient with this sort of market geometry, you'll be trading and you've got a bias, and let's say you want to go long, and all of a sudden the market reverses against you. Now, whether that is the big boys running stops, or whatever the case might be, it doesn't help you then go after the fact and see, oh my goodness, there was some sort of median line, long-term median line from a monthly time frame, from a pitchfork that was actually in my way, and I was trading directly into it, sort of thing. Then following different things like reversal candlesticks, looking at volume is very important. Momentum divergence, multiple time frame analysis, that sort of thing can definitely spot a change in sentiment for sure.
Yeah. What got you into teaching other traders?
Basically, just having the opportunity to try to show other traders that it is actually possible to trade. And I've got absolutely no financial background, but and trying to save them from all this damn heartache and blood, sweat, and tears, literally, that I had to go through. Obviously, there's a money aspect behind it too, but it's not really that much for it. I think the cost of actually finding a good mentor far outweighs the hardships you have to deal with if you're struggling doing this on your own. Market geometry for me, it's worked very well. It really started making sense of all the mess, or the perceived
the noise
that people see on charts and all that sort of stuff.
Yeah.
So if I could give anything back like this, these techniques have been working for decades, and they will continue to work into the future.
Have a good proportion of your students gone on to become successful traders?
Yes, absolutely. I've got quite a few of them that will pop in now and then, drop me an email, maybe a chat, and it's definitely helped them. Yet again, some of them actually went their own way and continue using market geometry, but maybe they like to be a bit more of a day trading sort of vibe, or longer term investors, or those sort of things. But it's definitely helped them to make better sense of what market structure is doing, and where you might expect reversals, or formulating a bias, for example, whether it's short term, long term, or whatever. So it's definitely helped quite a few traders in the past.
Yeah. Have you gone on to trade other people's accounts? People who come to you,
no,
not really wanting to trade, but you haven't.
No, I haven't done that, and it's something I won't want to do either. I think it's just the added stress that's involved there, especially when you start trading someone else's money that's got absolutely no clue about the markets. What happens if they, for example, would log into their account or want to see some sort of statement, and you're in some sort of drawdown, not understanding that these things are perfectly normal. And, yes, we'll get out of it just following the strategy and keeping on with things, And that's one thing. But I found with what I've learned from other people as well is that, let's say you have a fantastic year where you make something ridiculous, like let's say 50% profit turnover on someone's account, then they'll become used to that expectation. And people can become very needy and they don't understand trading. So I just want to keep out of that.
Is the fun aspect still there?
Absolutely.
After all these years, yeah, you still want to get up in the morning and do it.
Yes, I always joke that for me, trading is my life. It's not something I'm going to retire from when I'm 65, like someone that's holding a normal job when they go into their pension fund. This is something I'll do until I die. I think it's a great skill to have. Especially when you're in charge of your own finances and know how to approach the markets. You can do so much better than what any bank or fund will ever give you if you know what you're doing, obviously. Yeah, every morning I wake up, I live, breathe, and sleep trading. But since I've been doing planning trades, taking a longer term approach, swing trading rather than day trading, it's freed up a lot of time as well, which is also great.
How do you achieve balance and avoid burnout? What are your sort of, if you've got any techniques, or just how do you sort of withdraw a bit and then come back in fresh? Because, I mean, obviously, if you're doing 12, 13 hours a day of this,
well, to be honest with you, while I was stuck at home during this 4 months, like I mentioned, I've just moved back to the office. There was no disconnect between working and just being in front of the computer the whole day, because you want to be looking at what the markets are doing the whole time. So that's difficult. For me, I really enjoy separating coming to work. Although I'm still paying for my office, I'm self-employed. There's a disconnect between going to the office, looking forward to the day's work. Your productivity is so much higher. But when it stops there, it stops. I will from time to time make a point of not even opening the laptop, but just having a trading platform running on your mobile device, for example, and then just now and then look at it. But rather than opening the screen and getting sucked into all this noise that can be there, I try to tend to avoid that. And that's also one of the reasons I came back to work. Because as soon as you work from home trying to do this, well, from my opinion, there might be some people love working from home. Then, that's how I separate the two.
Yeah, it helps you separate the two.
For sure.
Yeah. How important is gut feel in trading? And we've talked about, the technical analysis. What about gut feel? Is there any merit in that?
Absolutely.
Idea?
This is something that comes with experience. Gut feel, it's like, I don't know how I can compare this with anything else, but gut feel I think there's definitely such a thing as gut feel. And just understanding how markets tend to behave, how the big traders also like to, for example, flush out smaller traders. And gut feel, just knowing that, if something's not right when you entered immediately, you can sometimes get a really good feeling that this trade's not going to go your way and just pull the plug. But also then you have to accept the fact that if it does eventually go your way, that you either must try to re-enter or just accept the fact that you're not part of it. So, but gut feel comes with experience, that's for sure. There's definitely such a thing as gut feel, in my opinion.
Yeah. And when you're in a losing streak, if that ever happens, is it because you're out of sync with the markets, or is there a better way to describe it?
Both. I think it could be an emotional roller coaster, maybe having some issues at home, at work, or whatever it might be. But also just the market's not entering into a range or whatever. Increased volatility, stuff like I said over the past 2 months, like I mentioned before, where things have been running sideways. Every single trade that I sort of want to enter just starts experiencing these ranges that could last up for like a month, so it's very frustrating. I've gone through losing streaks, that's for sure. But like I said, I tend to touch onto the side of swing trading a bit more. So it's not like I trade 20 trades a week anymore. I might do 1 trade a week, 4 trades a month, that sort of thing.
Yeah.
So, and with careful planning and stuff like that, if I do take 4 losses, it's not massive compared to a guy that would try to get involved when the market starts ranging, that wants to day trade and just gets whipped up by the market continuously and go through a large losing streak of, 10, 20 trades or something like that. I'm sure that can be pretty soul destroying, where I'm still pretty relaxed, if you know what I mean. Because I do not execute those many trades. But believe me, the trades that I do go after, I'm looking for quite a decent return on the risk I would be taking on. So they more than often far outweigh the risk that I take on.
Yeah, so you're kind of like the sniper who waits, right?
Yes. And it takes patience, believe me.
Yeah, of course. So just wrapping things up, tell us a little bit about what your new projects are in terms of teaching.
At the moment, I am working with clients in the US, where we continuously teach traders, especially a lot about market geometry. I've got a dedicated YouTube channel that I try to at least make 1 video a week or at least 2 a month. It's been pretty difficult recently. We've been quite busy with actually the lockdown. I guess there's a lot of traders that's either losing their income right now or fearful about the future that all of a sudden want to get involved in trading. So I am basically, we're always looking at doing more webinars, but also at the same time being very realistic that we approach new traders with the respect that they need, but also need to sit them down and make sure that their expectations are in check as well. You know what I mean? You don't want to promise someone that you're going to be making crazy lots of money and it's going to be very easy. There's just no such thing. And I think when it comes to that sort of education is what really sets it apart from other educators, is that they just tend to market stuff and they just want to sell things. And that's where their main line of business, where my perspective is I want to teach you how to fish as well. Trying to understand market geometry properly is also quite a steep learning curve. So there's, but just the quality of the analysis and stuff that I do and teach will hopefully work for the better in the long run. If people actually take the time to sit down and study these sort of things and do their homework themselves. Because in the end, it's not about what someone else teaches you that much. It's obviously finding someone that's really doing this sort of successfully. That you need to prove this out to yourself. If you don't prove this out to yourself, you're just going to be like I was and like many other beginning traders used to be, just jumping from one thing to the next, chasing the Holy Grail when there is really no such thing.
That's a very good point. Well, thanks for talking to me,
You're
Richard.
welcome.
We'll wrap up
Thanks
here.
very much for having me.
Nice one. Okay, thanks, Richard.
No worries, Nick.
Before we wrap up here, just to let you know, Richard's website is at youroptionsforecast.com. And if you're looking for some really sharp video tutorials, check out his YouTube channel, Price Action and Income, where Richard talks you through some of the strategies and tools he uses to make consistent profits from the markets. Bye for now.